Hello traders, David here again from Apex Alpha Wave Trader. Today I'm going to break down the dollar index futures for us so that we have an idea what the new trading week we are going to enter from Monday will look like for us. I'm currently on the monthly time frame now, and um, let's break down this chart from the monthly properly using Elliott wave analysis. Okay. I'm just going to use my drawing tools here. One moment, please. All right, let's see. So we have here a first wave. I think I'm going to change this color to blue. All right. One moment. I need to do this again. Sorry. Okay. So we have here as the first wave. Okay. And then this is the second wave. And the reason why I can call it that is because using the Fibonacci tool, if I can get it out here. Okay, if I use the Fibonacci tool from here to this level 2 or number 2 point here, you can see that we got to the 38% retracement level. Okay, now if I take this to where the third wave ended, starting from the number 2 point, now you can see that we got to the 62%. Okay, it's supposed to be 61.8, but I've approximated it on my Apex calculator to give me 62. All right, so now this tells me that this is a shallow retracement and this is a deep retracement, so we are definitely in an Elliott bull wave. Okay, so now while it is possible that this could be the end of wave 5, meaning that we have a truncated wave situation here, it's also possible that we still have upward momentum in the next few years to come, because you can see here, if I were to use the tool here now, you can see we have what looks like an ascending triangle or a barrier triangle. Okay, so if we bounced from here as A and this is B, so we definitely probably will have a C, all right, and then a D and E and then up. Okay, so that's what I'm looking at on the monthly time frame for the dollar index, but of course I could be wrong. So we are going to now break it down and go down to the time frame that we can look for swing trades or intraday trades. Okay, but this is what I'm seeing on the monthly time frame right now, so I'll just make this a little bit bigger. So you can see here the most current candle is well, it looks like a spinning top, but you can see we've been in a bearish situation for the past couple of months. All right, we had this spinning top here which acted as a reversal candlestick, and then we got this so far we are in a bearish situation. So right now our monthly bias is bearish. Okay, so in spite of everything I just told you, we are talking about the next few years to come, so you don't really have to worry about now. Where you should worry about is here. Okay, so let's go to the monthly time frame now, and then when we come to the monthly time frame, this is what I'm seeing. Okay, just use my drawing tool. I love this drawing tool, by the way. Now I'm going to use a pen. So from this point here like this, I'm seeing what looks like a corrective pattern. Okay, but at the same time, if I wanted to count the waves, I can start counting from here. Okay, so that means that I can actually call here the first wave. Let's make it another color. Second wave right now, and then this is the third wave. Okay, so that means that this is wave 4. All right, and at the same time that means that we have one more wave to go. So probably that wave will bring us to this trend line here, or to this level of support here. All right, it could have, of course it could also stop somewhere here. So we don't know that for now, but let's go down to the daily time frame and have a look. So this is a daily time frame. Now you see this was a symmetrical triangle, which also is a continuation pattern, and you can see because the price fell from here and got into this triangle, that is why we have this continuation pattern. All right, so but if we segment this area, all right, if we segment here out of it, so this entire place, just pretend it doesn't exist, you can see we have wave 1 here, wave 2, wave 3. Now we are bouncing around in the 4th wave. All right. So let's use the Fibonacci retracement tool and see what we see. So if I take my Fibonacci retracement tool, now because I have synced my APAC calculator to the Fibonacci tool, the first time I draw it, I'm going to get my APAC calculations out. Okay, I guess that I already have one on this chart. I'll just check. Let's have a look. Okay, so let me just delete that right now. All right, and all right, so let's do that again. So you can see here we have calculations down onto here. Okay, so right now we've achieved target 4. Okay, and we are hoping to go to probably target 6, which of course makes sense because remember that target 6 is probably in the region of this level of support and that other trend line I drew. All right, so now we have here as the first wave. This is the second wave which got to the 60% retracement. It's a deep retracement and it's also a simple one. And then after the third wave, we got into the fourth wave, which is a complex correction. Okay, so this means it's a combination of probably a zigzag pattern and a flat correction going on here, a zigzag pattern and a what do you call this? Probably a triangle. But either way, it's a combination of corrections. Okay, but we are right now in a fourth wave. All right. So, and if I project my retracement tool from number, one moment here. All right, if I do this, you can see that our retracement got to the 38%, just slightly above the 38%. So that tells me that this is the fourth wave. Okay, now, so we are expecting one more leg down. Okay, so how do you get into this trade? Well, it's very simple. Now that you know that we have one more leg down, you simply wait for this trend line to be broken. Didn't draw it properly, sorry. Let's just get that. Okay, I could just use this 2. Okay, no, I have to use this. All right, so we're actually waiting for this trend line to be broken. Okay, I'm going to go down to the 4-hour chart now and we'll have a look see. So this is what's been going on right now. Okay, and this is affecting all the major pairs as well. If you compare this index to the euro, the GBP, you will see that they are all fluctuating in a corrective pattern right now. All right, so initially I thought that this was supposed to be an expanding triangle, meaning that this was A and then B and probably C, D. So that means we still have E to go, and then the price should drop down here, but I could be wrong. But the main thing is that this is what we are into right now. So we have this diagonal channel, which we can also call a bearish flat situation, and it's also a continuation pattern. Okay, so what you are going to be looking for on the major pairs, if you are going to be trading the pairs that have the US dollar as their major, like the USD CHF, USD CAD, possibly USD JPY, but USD JPY is rather strong against the dollar right now. So let's just say USD CHF, USD CAD, you will want to consider selling. Okay, so you are going to be looking for opportunities to sell. Don't think about buying. Okay, even if you do get a bounce to this point, I think it's better you wait for an opportunity to sell. Okay, and if you are going to be trading the pairs like the Aussie, the New Zealand, the British pound, all of them paired to the USD and having the USD as their secondary pair, then you are going to be looking for opportunities to go long. Okay, so that's what I believe you should be doing this new week we are going into in July. So having said that, let's have a quick look at just one of these pairs to see what I'm saying. So let me go to the New Zealand now. Okay, so you can see here on the New Zealand, I'm just going to change the template, make it easier. So you can see here on the New Zealand, let's just mark this area off. Where's my tool? All right, so let's mark this region off for now so it doesn't confuse you. I want you to focus on this place. So you can see here we have wave 1 and 2 and 3, 4. All right, So we are in the fifth wave. All right, and if this is the fifth wave, by Elliott wave analysis, this should give us a sort of divergence situation. Then we are supposed to have our corrective wave A, B, C. Okay, so we are looking for something like that. Now, if this is the fifth wave, let's go a little bit lower so we can see where we possibly might get our profit targets to. You can see it's probably the fifth wave. You can see how sluggish it is. Okay, so right now, if you look at the MACD, you can see that it's on its way to forming a divergence situation. And in order for it to be a proper divergence situation, then by necessity it has to be something like this. So we still have a little bit more to go. All right, we still have a little bit more to go. If I were to use my calculator here, let's have a look and see, can I do that now? All right, so using the calculator on this smallest wave bottom situation I have here, you can see that we just fulfilled 3 price targets with more to go. So it makes sense to be thinking of looking for an opportunity to go long here, possibly with price targets to number 5 or even number 6, because number 6 tallies with this line I drew, though the line itself doesn't matter. But I think that you can possibly be thinking of 5 or 6. So we are looking at anything between 77 pips to 124 pips. Okay. So please employ sound technical analysis. Now, this applies to all the other pairs as well. Just employ sound technical analysis. Look for opportunities to go short or go long, depending on where you are going. Okay. So you can see here, if we had here as wave 1, wave 2, wave 3, wave 4, wave 5. So we are going to have a correction here. And I'll just get my tool out and see what I can do. So if this is the start of wave, the A leg, okay, because this is 1, 2, 3, 4, and 5. So if this is the A leg, we possibly might get a B like this and a C here. So you will be looking for a wave bottom situation. Okay, so that means you are looking for a situation where you get a golden cross on the MACD to go up, and possibly a golden cross of the EMAs, and then you take this to the upside. All right, so this is what I'm looking at for these pairs this week. So I hope that was instructional for you. I'm not going to go through the other pairs again. I've used the New Zealand USD as an example. You use your technical analysis knowledge and what I just showed you on the other pairs. If you are going to be trading USD CAD, USD CHF, look for opportunities to go short. If you are going to be trading GBP USD, I think GBP USD itself, let's have a look at GBP USD before we go, because it seems GBP USD is a little bit weak against the dollar right now. So this is GBP USD. Just going to change the template again. All right. So this is what I'm saying. Normally, when you see, I hope you guys can understand this part I'm saying. When you see something like this, in other words, when we see something like this is positive divergence going on here. You can see here a flattening of the histogram. Sorry, I'll just delete that. Let's use the other one. Okay, so when you see something like this, you can see a flattening of the histogram here. We have a positive divergence situation going on here, but we have a hammer here as well. Okay, and you can see that the EMAs and the MACD, they've not crossed yet. So for this guy, for GBP, this is what I'm saying. So expect a move possibly to test this trend line. And when we test this trend line, this will actually give us a wave bottom situation. So we can expect that. But for this week, you might want to, I'll just go to the 4-hour chart. You might want to be looking at the GBP with a cautious eye. All right. So if we can break this level here, okay, once we break this level, I believe that we can buy the pound. But until then, you might want to be careful. Okay, so I'm just going to go to the 1-hour chart and have a look. For GBP, please be careful. It is possible we can get a move to this region like so. Where's my wiggly tool? I think I got the wrong one. Yeah, and then a drop. Okay, possibly to this level here. Okay, If we do get that, then we can possibly sell in the next few days for GBP. All right. So this is a level to be careful about. So for GBP, you may want to be cautious. So with your trend line drawn here, consider this. If the market breaks above the trend line, buy. But if the market respects the trend line and decides to give you a wave top situation here, sell. All right. And that will give you, let's see, oh, well, possibly 160 pips, 170 pips if it does go down. All right. So that's all for today. I hope that you guys learned something from this, and I wish you guys happy trading and also a great new trading week. Thank you very much.